What's up guys, welcome to my channel. This is Jonathan David, and today I'm going to talk about two popular online brokerages, these being M1 Finance and Betterment. These two brokerages offer kind of different takes on investing for you and me in regards to kind of what level of input you want to put into your your investing activities. Regardless, both of these offer the web-based as well as app-based on your phone. And in the last 5 years or so, having all these free brokerages, there's really no excuse not to want to take advantage of this while you can. So what I want to do is kind of go through each one of these, kind of give you their pros and their cons. As you can tell from my past videos, I like to talk about a lot of things personal finance related, and kind of go into, especially going into year 2020, on what tools you should use and kind of how it should best kind of complement and work towards the goals that you're trying to put together. So to kind of preface this discussion, a lot of these brokerages, they are completely free, and there's a lot of them, but these are the two big popular ones in their kind of own sectors. And if you like this video, I'm going to provide some referral links for both of these. This is a pretty cool opportunity because like in M1 Finance, if you open up an account, we'll both get some free cash to invest, and Betterment will get some free management that I'll kind of go into later. So I'll start off with M1 Finance. This is a relatively newer brokerage compared to Betterment. They were founded in 2015, and as of 2017, they started off for free trading. And this is kind of really in response to a lot of the other brokerages, namely Robinhood, that kind of started this commission-free wave, as you will. But the big difference is that between these two is the level of involvement. With M1 Finance, what you're able to do is really kind of put together your own portfolio in which you can allocate your funds. So if you want to have, say a quarter of your portfolio will be, say, Tesla, and a quarter of portfolio will be energy stocks, and you can have these different components of your portfolio be pre-allocated based on your choosing, whether it be indexes, whether it be as well as individual stocks. So that's pretty cool. And M1 Finance, they have a lot of these that you can do make it yourself via custom, or you can kind of pick from a lot of them that they offer on their website, which is pretty nice. So in the event that you want to have a high dividend portfolio, they have some sample ones that you can take and you can edit, which is a pretty cool feature. The pros that I associate with M1 Finance, as I said, trades are free. They offer stocks, they offer ETFs, and they offer bonds. As I said, you're able to pre-make your portfolio based on what you want, and it has a level of automation. If you remember my past video where I talked about Robinhood, that one, it did not have that automated portfolio, whereas M1 Finance, it does have a little bit where you can pre-configure it, and your dollars, once they are able to invest into these different indexes in your portfolio, it will do so automatically without any of your input. That's a pretty cool feature. Due to this, they have fractional shares, which is also kind of a new wave that's hitting all these brokerages online. But this really allows you to buy, like, say, 1/10 of a stock. So when you look at big stocks like Amazon and whatnot, where they're over $1,000, most people do not have that capital to spend $1,000 on a single share. They may have $100 to put towards it, but not the full 1,000. So what's nice about these pies that you make in M1 is that you're able to put that $100 towards, say 0.1 or 10% of that Amazon stock. Another nice thing about M1, due to this fractional share, you're also going to get fractional dividends if your portfolio has dividend stocks. And while it doesn't support a traditional DRIP system, which is a dividend reinvestment kind of platform, what it does is it takes the dividends that you receive and spreads it across your entire portfolio. In comparison, a traditional DRIP, it puts the dividends back into the stock that issued it. So this is a pretty cool feature. I think I have no complaints with it, because really, that's probably how you want to have it done. You have your investment portfolio, you want to fund it, so fund it accordingly with your dividends. Another cool thing about M1 Finance, as I had mentioned in past videos, is that it supports a wide variety of account types. Think of individual taxable accounts, so your non-retirement accounts, right? Think about any joint accounts. Think about any also retirement accounts. It supports traditional IRA, Roth IRA, SEP IRA, as well as it supports trust. M1 Finance also has a checking account and a borrowing kind of feature, which are kind of different levels of service that they offer to their members, which is kind of nice. It has a mobile and a web presence, as I had mentioned, and it has a fair amount of research that you can use on the app as well as on their online. Keep in mind, these kind of things, I tend to go to third-party kind of solutions anyway, such as like Seeking Alpha and whatnot, where you can really kind of get that sense of how your stock is doing and what dividends, and kind of are the dividends going up in time, or kind of, you know, all the I guess information related to that stock that you're interested in purchasing. So while this is nice, I wouldn't, you know, it's not a big deal, I think, in most people's eyes. It also has a lot of support that through the phone, which is pretty big for online brokerages, is having that support if you have any issues or questions or whatnot. So that's a really cool, nice thing that M1 Finance offers. In addition, it also is covered through FINRA and SPIC in terms of insurance. Now, when we look at the cons for M1, there aren't many, but there are some. In particular, you know, it doesn't offer any options trading. You know, this may not be the platform. There are other brokerages out there that can offer it, as well as I know it doesn't offer any crypto kind of trading capabilities, which for many, that's a little may not be of value. In my case, I don't deal with crypto, so it's not really, it doesn't something that impacts me, but it's something to be aware of. In addition, one of the big things about M1 Finance compared to a lot of these other traditional brokerages is that it doesn't offer real-time trading. It has a single window, at least for their basic membership, which it will trade every day at 10 a.m. So you have that single window. You can't get those intraday swings in the stocks and things like that. But if you're really kind of just looking for a platform that kind of has semi-autonomy as well as some customization that you can do, this is a pretty cool compromise for that. In addition, you know, they also have a minimum account to get started. You know, a lot of these other brokerages, they advertise no fees, no minimum accounts, but you know, in M1 Finance, it is $100 to get started, which, you know, if you're going into investing, that's really kind of a low barrier to entry. So I wouldn't view that as a bad thing as well. It just lets you, you know, it's kind of cool to put some funds in and have to invest it and see kind of how it performs. So I don't really view that. If it was a little higher, maybe I'd knock it down a little bit in terms of kind of my perception of it. But that is kind of my take on it. So that's kind of my pros and cons. You know, I think it's a very cool app. Now, in contrast, Betterment, they're one of the very first robo-advisors, if that's a term that's been kind of tossed around. This is really, think about automated advising. So traditionally what you would have is, you know, money managers, and these were people that you go call up, say in the yellow pages, and you'd have an account with them and they do all the trades and all that kind of stuff for you. And what this does is really, it takes that out and it uses their computer algorithms to kind of do their trading. So Betterment, it got started in 2008, so it's been around for about 12 years now, which is pretty impressive. And it's really something that they manage your money for a fraction of the fee that the traditional investor or money managers would have done in the past. So that's something to consider. And as of 2019, they have a substantial amount of assets under their management. It's approaching over 16 billion. So they have quite a bit of money that they manage for a lot of people across the US. Now this product, compared to M1 Finance, is really geared towards the, I would say, the newer investor that doesn't really know kind of how to invest, but knows they should invest. So this is something where, you know, it's kind of a hands-off approach, you know. So when you go into Betterment, what you see is you set up what kind of account you want to set up. You know, you can set your, you know, individual taxable, retirement accounts and whatnot. Kind of go through what other accounts they support, but what you do then is you kind of really just pick the asset allocation in terms of what percent stocks or equities and what percent bonds. And this is really kind of what you do. And it's kind of all you have to do. You don't have to pick the stocks. You don't have to pick kind of what percentages go to what for stocks. You know, you just kind of pick that broad overview, and that's really kind of what gets you going and investing. And this is really something that's really good because you're able to invest with very low amounts. You have the ability to have you don't have any fees to start, or not fees, but minimum deposits to start. You also have the ability to have auto rebalancing based on your portfolio selection. So if you do 90% equities and 10% bonds, it will kind of keep that within that range if things were to drift a little bit. And it's also really good if you want to set up a goal for your investing. It has really nice tracking features where it will tell you if your projection is going to meet that goal or not, and kind of how much it would take to get to it. So that's really kind of nice about it. So if we look at other pros that I associate with Betterment, we talked about not having any minimum deposit to get started. The cheap fee is also, it can be viewed as a plus or a minus in this regard. So I'm going to put it here. It's going to be, they start off their basic, they call it their digital service at 0.25%. They also have a premium service, which kind of gives you more technical support and more human advising, as well as just some more features that they offer, and that starts at 0.4%. And this is really what it does is it's the percent of the money that's being managed by Betterment. So think about for every $1,000, 0.25% would be what, $22.50 or something like that. That's being charged yearly for your funds. Now in contrast, if we look back at traditional money managers with human advisors, we're looking about roughly 1 to 2% that was typically charged. So this is really quite a bit cheaper than what was done in the past. But because there is a fee, especially compared to M1 and these other brokerages that have no fees, it can be viewed as kind of that is a plus or minus. I would say for a newbie investor, having this cheap service is worth that fee. They also have other things such as ways to kind of mitigate any tax implications, what they call is like tax loss harvesting. And this is really kind of, shifting your funds around in such a way that, when it comes tax season, your sell or your losses kind of offset your gains type of deal, which is kind of nice. This is automated. Granted, you do have to select it in the app for this. We talked about they do the automatic rebalancing, and it has a very simple goal platform. So for their equities, you have really 6 indexes or stocks that they invest in. These are your really high level things. Like think of like your U.S. total stock market, or your international stocks, or international dividends, or things of these natures. Or there are these big ETFs that are pretty encompassing of the entire stock market. Similarly, they have 8 bonds. Once again, these are pretty big pools of these bonds that they allocate your funds to. And another promotion that they do, or benefit, is that when you sign up, you get a free management of up to a year, so you don't get to pay that 0.25% for up to a year, which is a pretty cool perk. They also have phone and email support, and they also have the ability to link all your external financial accounts, so you can kind of get an overview of your entire financial picture. In terms of the accounts that are supported, they do support individual and joint non-retirement accounts. They support your Roth and your traditional and S&P IRAs. They support trusts, and they also have a cash management account where it's FDIC insured up to $1 million. So this is something that's kind of being common among all brokerages these days, having some sort of cash management. Some cons, I would say, human advising is not included in the basic digital service. It is included in the more expensive service. So that's a con in my opinion. As I mentioned, there is a fee. That 0.25%, while minimal compared to a traditional human advisor, does compound over time. So it is something to, as you get more involved in your investing, to maybe think about transferring it away from Betterment, or just knowing that it's there if you don't want to have that active hands-on approach. You also have very limited kind of control where your money is allocated. As I mentioned, they have 6 equities and 8 bonds, and that's really it. So anything else, you can't say, hey, I want to buy X amount of shares of this company or whatnot. You don't have that customization. So depending on your kind of what your involvement desires are, this could be a con or a benefit. I would say it's a benefit for those that don't know what they're doing in investing, and it's probably a little too hands-off for those that do want to have some more of that control. especially compared to M1 where they have that customization. Another thing that is probably a con is that closing your account may be a little, I would say, cumbersome. I've read that there's a lot of, everything has to be happening over traditional snail mail. So it's not over email. It's not with the digital kind of aspects that we're used to. So that's something to consider. So in short, kind of what do I recommend? Well, honestly, I use both. Right now I use my M1 Finance portfolio really to kind of build up my dividend kind of portfolio and tracking it that way. I use a Betterment Roth IRA account where I max it out every year for that, and I like the hands-off. I think I've been using it for about a year now, and it's been, we had, last 2019 was a great year in stocks in general, but my Betterment account was up 28%. So I have no reason to change it. It's doing what I expect. Fee was pretty nominal. So I mean, it's just one of those things that I think, I'm going to see how it goes. I'm going to keep tracking it. I'm going to compare it to kind of how my portfolio is doing in M1. But for really, I think there's no harm in using multiple brokerages, depending on what you want to do. And in my case, as I mentioned in, M1 for kind of my dividends, Betterment for Roth IRA, and I use Robinhood for kind of just buying stocks and kind of playing around with that on there. So a lot of these different things, and then you have your different 401ks through your companies and all that kind of stuff. So so that's kind of how I would do it. So if you really want to have that active role in your investing, maybe go a little more towards M1. If you want that passive hands-off, I'd probably go towards Betterment. But in both cases, I don't think you can go wrong. Probably the biggest thing is paying the fee with Betterment, but if you know that going in, it's really not that bad. I'm going to give you guys links to both of these for referrals. If you sign up under one of these links, we both get some free cash or management services depending on which brokerage you sign up with. And as always, thank you guys for coming to my channel. I hope to provide you with valuable insights and kind of lessons learned that I've gone through as I start my investing career. And I would really appreciate it if you guys hit that like button and the subscribe, where you guys can stay up to date on any new content I put out. And I appreciate it. Thanks, and I hope to hear from you. And please feel free to comment, and I'll be responding. So until next time, thank you. Bye.